The market keeps moving right along. I'm Justin Miller with the Chong Miller Group, and this is the August 2021 real estate market update for single-family resale residential real estate in the Las Vegas Valley. So let's go ahead and dive right into the numbers this month. First thing I want to talk about is pricing. Pricing continues to remain very interesting and very strong. We have been marching forward approximately $10,000 every single month all year long, and July of 2021 continues that trend. Remember, we always look back 1 month to the prior month because we're looking at the statistics about what did happen. And then we do month over month comparisons. So July to June and year over year comparisons, July of 2021 to June of 2020. All right, so let's go ahead right into the data here. The median sales price for single-family resale residential real estate in Las Vegas increased in July of 2021 to $404,735. That is up from $394,000 in June of 2021. That's up 2.6% month over month. We are up from July 2020, $325,000. Which means we're up 24.4% year over year. Kind of interestingly, we are up $64,375 since the beginning of the year. So in 7 months, we're actually up 18.9%. So very strong pricing. Now, I do want to point out one thing. We've crested that psychologically significant $400,000 point. This is the highest nominal price we've ever seen in Las Vegas. In fact, each of the last several months that's been true, but being the highest nominal price and also cresting that psychologically significant $400,000 number, maybe it's time to sit back and think just for a minute about where we are historically in this marketplace. If you've been watching my prior videos, you know that sometimes I talk about the difference between real and nominal dollars. So inflation adjusted dollars are ones that have been normalized to a particular year. If we take the prior peak, which occurred in June of 2006, that had been at $314,700, but adjusted for inflation to 2021 dollars, that was approximately $420,216. So we're still sitting about $16,000 in real terms below the peak of where we'd been in 2006, but we are very strong and we are moving up. Will we get that additional $16,000 this year? Will we end up with the highest, not only nominal, but highest real dollar figure on single family homes? That remains to be seen. $16,000 between now and the end of the year is certainly possible. If we continue on trend, we'll do it in 2 months. Pricing generally slows some in the August and September timeframes, picks up again in October, and slows a little bit in November and December. So sort of normal seasonal pattern on pricing. Will we, with seasonal patterning on pricing, get that 420, 421 kind of number by the end of the year? We may. I wouldn't hold my breath on it. I think that the increases in pricing will moderate a little bit here in the second half of the year. We'll still see strong pricing. We'll still see price appreciation. We may hit the 420, but I'm not certain about that. I don't think we continue at $10,000 per month. All right, so that's what pricing looks like. Now, I have been pointing out one other piece of pricing information over the past several months, and that is price per foot. And so I want to talk about that again this month. July 2021, the median price per foot increased to $219. Very strong, highest ever. That's up from $213 in June of 2021. That's up 2.8%. And we're up from $175 per foot in July of 2021. That's up 25.1%. Now, We're up $30 per foot since January. So in 7 months, we're actually up 19.7% on price per foot. I want to again compare those to the price per foot at the median sale price. Price per foot this year is up 19.7%, whereas median sale price is up 18.9%. Again, price per foot seems to be increasing very slightly more than the median sales price. And this is indicative of a higher priced mix of housing being transacted. And I think there's a couple of reasons for that. I think that with median sale price at $400,000, the inventory of available homes in the sort of 360 and below, those homes that people had been picking up perhaps last year in the mid 200,000s, those are basically gone. And so I'm looking at single family homes in this video series, but I think if we started to look at condos and townhomes, we'd see a little bit different information. I think that we'd see price per foot going up much less slowly than it is, and probably a little bit below in line with average sale price, or median sale price rather. So I do want to point that out. I will put in a couple of statistics at the end of this video on townhomes and condos because they're kind of interesting and they are taking on a more consequential role in the market right now. All right, so prices are going up, but what about sales? Are sales actually occurring? I've been saying demand is just incredibly strong. It's materializing from many different sources. And so if we continue to see demand go up as we see price go up, or rather unit sales go up as we see price goes up, that suggests that we still have an incredibly strong demand profile out there. Well, number of units sold, 3,280 in July of 2021. Now that is down, it's down 5.3% from the 3,465 that took place in June. It's up 6.6% from the July 2021 numbers. But I want to point out how strong this 3,280 number is, right? Yeah, it's down a little bit month over month. But if we were to exclude 2021, which has been incredibly strong, we'd have to go all the way back to April of 2012 to have gotten more than 2 months higher than this number of transactions. So in other words, excluding 2021, there's only been 2 months higher in number of sold transactions, single family residential resale across the entire Las Vegas Valley, going all the way back to April 2012. So over 9 years. This is still a really strong number, and anyone who suggests this is not does not have any historical bearing and understanding of what's actually taking place in the Las Vegas market. This is a really strong number. All right, what about pending home sales? Because pending home sales are those homes that have gone into contract that will show as sold or closed next month, or they'll drop out, they'll be back on market. So pending home sales in July of 2021, 3,284. Interestingly, that's almost the identical number to closed home sales. It's a statistical coincidence, but it is interesting because it suggests that there were an equal number of contracts being written as there were contracts being closed at the end of a sale during the month of July. So that indicates very steady state during the month of July. Now, that number of pending units is down 1.7% from the 3,341 that we saw in June of 2021. And that is up 10% from the 3,020 that we had seen in July of 2020. If we actually look at the data and kind of average it out over a period of time, this is interesting because going all the way back to March of this year, so March, April, May, June, July, 5 months, we've been at approximately 3,300 pending home sales at the end of each month. So this suggests, again, tremendous stability in this market. with regard to number of homes that are selling, very high level. Number of homes going into contract that have not yet closed, very high level. And we see this with increasing prices. So we still see very strong demand in this market. Well, what about the total number of homes for sale? This is sometimes referred to as inventory, and this number had been really low earlier this year. In fact, I had commented that I had never seen the MLS report a number below 5,000 prior to October of 2020. And that number at its nadir, at the bottom point, had gotten all the way down to just below 1,800 units for sale. That's crisis level small inventory. That is an acute inventory problem. Well, we have approximately doubled the inventory from the nadir. We are at 3,791 homes for sale at the end of July 2021. That's up 5.5% from the 3,593 homes that were for sale at the end of June. It's still down 43.1% from the 6,526 home sales that we saw, or rather for sale homes that we saw at the end of July of 2020. We're up 17.3% from the bottom of this acute inventory shortage, but we're still down 57.5% from the average inventory of 2019, right? Pre-pandemic year, strong sales in 2019. So it's completely fair to compare to 2019. Inventory is still down by more than half, 57.5% from the 2019 average, right? Not from a particular point in time, but the average across the whole year of 2019. So we've got the number of for sale units, and we see inventory is going out of the market with pendings and with closed sales. So we need new inventory coming into the market, and that is by way of new listings. New listings meaning a resale home has just been listed into the MLS and is available for purchase. So new listings that came into the market in July of 2021, 4,118. Now that's up. It's up 2.9% from the 3,999 that came in June of 2021. It's up 11.9% from the numbers that came in 3,660 in July of 2020. Is this a flood of new inventory? Is this the predicted wave that's going to overwhelm everybody? I don't think so. Now, this is the best number of new listings since June of 2019, right? We only have to go back 2 years and 1 month to find a month where we actually had more inventory coming into the market, more new listings coming into the market. Remember, 2019 was a very strong market for us, and it was pre-pandemic, so a valid comparison point. We're getting above normal new listings coming into the market right now, but not very substantially higher. This is still a trend that we're seeing where people are coming into the market. Now, one of the interesting things with this number is March and July tend to be the strongest months of the year for new listings to come into the market. That's just the seasonal pattern if we look back over long periods of time. And so will we continue to see these higher numbers of new listings? Well, hopefully we'll stay at these levels because remember, inventory of available listings is still down by 57.5%. This market, with the level of sales activity that we've got taking place, and with these escalating prices that we're seeing, we could sustain new listings coming in at 6,000, 6,500 per month and not have a problem. So we're getting above normal, but we've got a very above normal market right now. And we're just slightly above normal on new listings coming in. We're not seeing any kind of wave. What about back on market for the month of July 2021? We saw 1,191 back on market. That's actually down month over month by by 10 homes actually. Statistically a 0%. Inconsequential. The elevated back on market is coming down a little bit. And if we normalize it for the strength of the market, meaning number of actual sales, we're elevated, but not by a whole lot. Interestingly, as related to back on market, I will say that is in July of 2021, very predominantly associated with bad appraisals, appraisals coming in low. Appraisers, again, seem to be the only category of people in the market, actual market participants, that don't believe that prices are going up. Prices clearly are going up. And in fact, because prices have been going up about $10,000 per month all year long, it's rather interesting if you see a house next door to the one that's for sale, a house next door that had sold, and you're thinking about putting in an offer on this house, it's identical in most respects to the house that just sold. Well, the house that just sold was on the market 2 months ago, went into contract at least a month ago, and sold based on what it had been listed at 2 months prior. So that suggests this house next door now should be $20,000 more expensive when you put it into contract. Now, it doesn't necessarily, the market dynamics don't necessarily work exactly that way, but appraisers seem to really be missing this point. And so appraisers don't believe prices are going up for some reason, even though very clearly, not anecdotally, but actually statistically, we can see prices are up 19%, 18.9%. This year alone, prices are strongly appreciating, and appraisers who are second guessing the market to put their own opinion in vis-a-vis the actual contracting party's opinion of what price is, they're doing damage to the individual participants in this market. They're not harming the market. The market's just ignoring what the appraisers are saying. So appraisers are making themselves kind of obsolete every time they second guess the market this way. Not all appraisers are doing this. A lot of appraisers are good, but we're seeing a sizable, percentage-wise, sizable number of appraisals coming in below market. And this is something that I've been complaining about over the course of the prior year. A lot of other people have not wanted to talk about this, but we're starting actually to see banks and escrow companies complaining about this kind of thing as well. This is actually statistically occurring in the market at recognizable numbers. So be aware if you're on the buy side. You could be faced with a situation where an appraisal comes in low and you're going to have to talk to your real estate agent about what to do in that kind of situation. Be aware on the sale side, you're going to have to talk to your real estate agent about what to do when appraisals come in low and how to avoid appraisals coming in low. So I do want to make two other comments here, and this is as related to townhome sales and pricing and condo sales and pricing, because these are becoming a more consequential portion of the market. So sales on townhomes during the month of July were down 5.5% month over month, but they're up 22% year over year. Now that compares to with single family homes down 5.3% month over month and up 6.6% year over year. So very similar decrease from June to July of what we saw from townhomes to single family homes. But year over year, townhome sales are not just up 6.6%, they're up 22%. So very strong. We're seeing real strength in the townhome market, where we did not see that last year at all. We saw people wanting to be sort of out of multifamily living environments. Pricing on townhomes for the month of July, up 4.5% month over month, up 19.6% year over year. Now, the townhome market is smaller than the single family home market. There's fewer number of houses that exist in general and fewer of them that exist in inventory for sale. And so every individual sale has a bigger impact on price for a townhome than it does in the single family home market. And so I'm not pulling in the individual numbers right now, I'm just looking collectively. But so if we start seeing townhomes selling in a lesser expensive neighborhood at a higher rate and a more expensive neighborhood at a slower rate, that's going to pull the median sale price on townhomes down more quickly than it would in single family homes. So we are up 19.6% year over year on pricing. That is relative to up 24.4% year over year on pricing for single family homes. And month over month, pricing up 4.5%, where we were up 2.6% on pricing for single family homes. So again, we're seeing strength in sales year over year, strength in pricing year over year, strength in sales month over month, and strength in pricing month over month on townhome. And so what about condos? Similar thing. Condos were really significantly hit last year with a lot of people wanting to move out of the closer in multifamily living environments where pools were closed and saunas were closed and gyms were closed and et cetera, right? Sort of the advantages of living in the condo became disadvantages last year. And so on pricing, we see pricing is up 18.1% year over year, vis-a-vis 19.6% year over year for townhomes and 24.4% for single family homes. We see pricing is up only 0.4% month over month, vis-a-vis 4.5% month over month for townhomes and 2.6% for single family homes. What about sales? Like with the market, sales for condos were down this past month vis-a-vis the prior month. So they were down 9.8% month over month for condos, down 5.8% month over month for townhomes, and down 5.3% month over month for single family homes. But year over year, right, where condos were depressed last year over year are up 40% on condos, right? So demand clearly has rematerialized for condos. People are bidding up those prices to be able to get back into condo units. That 40% year over year, again, compares to 22% year over year for townhomes. All right, so those are the statistics for the month. I do want to remind you, at the Chong Miller Group, we help people buy and sell homes. We would love to help you with your real estate adventure, whether you're buying a primary residence or a secondary home, or you're making an investment and you want to be a landlord. Or if you're on the sale side and you're thinking it's time to sell out the investment you've got, take some money off the table, maybe do a 1031 exchange and buy something else with a lower interest rate or a different type of product, housing product, maybe moving from a single family home to a townhome kind of environment in the investment, or you're looking to sell your primary residence and move to a bigger or a smaller primary residence. Under any of those scenarios, you are better served by having professional help, by having people who understand this market and operate in this market day in and day out. And we do that at the Chong Miller Group. Please, if you have curiosity about what your house may be worth or how to get into a new house, reach out to us at the Chong Miller Group. We're here to help you. We help people buy and sell homes. We'd love to talk with you. Look forward to seeing you again soon. Thank you.